Welcome back to Biz Vinci. Today we're diving deep into the world of economics to explore the 10 biggest booms and busts in economic history. From the Roaring Twenties to the dot-com bubble, these events have shaped our world in profound ways. So let's get started. The Tulip Mania. Our journey begins in the 17th century in the Netherlands, with the infamous Tulip Mania. With the recent introduction of the fashionable tulip, prices had soared as many scrambled to get their hands on this rare commodity. The Tulip Mania was a speculative bubble that saw the prices of tulip bulbs skyrocket to absurd levels, only to crash spectacularly. It's a classic example of irrational exuberance. It became a metaphor for any bubble that irrationally explodes in value above its actual intrinsic worth. The South Sea Bubble. Moving on to the 18th century, we encounter the South Sea Bubble in England. Beginning in 1711, when the Act of Parliament founded a British joint stock company called the South Sea Company, as a way of managing the national debt, a bit like bonds. In 1713, it was granted a trading monopoly in the Americas. Based on the profits of the slave trade, as per previous centuries, the public expected the trading to increase and so invested heavily in the company. The South Sea Bubble was fueled by a frenzy in stock trading. The company offered a 6% interest on stocks, a bit like a Ponzi scheme, and with inflated optimism eventually leading to a catastrophic collapse. When the War of the Spanish Succession ended, everyone expected trade to increase, but Spanish taxes and restrictions put a stop to it. The king made himself governor of the company, which further inflated prices, only for the trade to struggle. The government and the company just kept buying the stock to keep up the appearance before it inevitably crashed. Even Sir Isaac Newton lost money. The Roaring Twenties. Fast forward to the 1920s, the era of the Roaring Twenties. This was a time of economic prosperity and spending. Coming after the First World War, it saw a boom in construction, consumer goods, electricity, and the expansion of the West. The US became the richest country in the world per capita with a booming stock market, but it all came crashing down with the Great Depression, triggering a worldwide economic catastrophe. A worldwide slowdown that eventually led to the Second World War. The dot-com bubble. Let's jump to the late 1990s, the era of the dot-com bubble, a whole new world about to open up with the introduction of the World Wide Web. Welcome to AOL and the first online businesses. The dot-com bubble was driven by excessive speculation in internet-related stocks. Greed took over and a massive dose of FOMO led to companies spending a fortune to get on the bandwagon to secure a place in this new economy. When it burst, it wiped out trillions of dollars in market value, destroyed some large companies, and clearing the way for the likes of Amazon and Google to become the next era of computer-based monopolies. The housing bubble. Next we have the 2000s and the housing bubble, with a politically driven and prioritised effort to leverage housing from the start of the millennium. The cost of mortgages had dropped, fueled by artificial mechanisms from the banks. The housing bubble was fueled by irresponsible lending and housing market speculation. Nobody could consider the chance of a slowdown and all raced to get in on the free-for-all. Its collapse led to the global financial crisis of 2008, knocking out established banks like Lehman Brothers and forcing austerity and bailouts from central banks. The Bitcoin Mania. Now let's talk about a more recent example, the Bitcoin Mania. Bitcoin's meteoric rise in value captured the world's attention, but its extreme volatility has left investors on a roller coaster ride. Replicating each and every other bubble before it, nobody entertained the idea that it could drop in value. With Bitcoin came other coins such as Ethereum and other altcoins. The sense that it was like the dot-com bubble 2.0 drove the technology to insane values before the inevitable come down. Companies such as FTX, which turned out to be scams, defrauded investors, which damaged credibility. Added to the question, what exactly do we do with this crypto? Basically rendered it a technology without a purpose. Then there's NFTs. Black Monday, 1987. In 1987, the global economy was hit by an unexpected stock market crash that wiped $1.71 trillion of value off the global balance sheets. There are varying opinions of what caused the crash, from lack of confidence in the dollar, inducing a sense of fear and hedging on huge scale, to a massively overvaluing of stocks prior to that day, and the correction being an inevitability. The effects saw a massive discrepancy between futures and stock prices, meaning futures were suddenly worthless, and so the market went into a meltdown. The green energy boom. Shifting gears to a more positive note, let's talk about the green energy boom. As the world focuses on sustainability, the green energy sector has experienced tremendous growth, driven by a political emphasis rather than market necessity. It has also become a mechanism to increase taxes. How this pans out though, we are yet to discover. Do you think it could lead to a crash? If so, leave a comment below. The gold rush. Now let's travel back to the 19th century and explore the Californian gold rush. With a huge reduction in the cost of immigration, many flocked to the Americas in search of wealth. The gold rush of 1848 to 1855 saw a massive influx of prospectors in search for gold. While some struck it rich, many ended up with nothing. It created towns and forged the US. But the rush eventually subsided, leaving behind a complex economic legacy, which we can see today. The Japanese asset price bubble. Heading to the late 1980s, we encounter the Japanese asset price bubble from 1986 to 1991. Fueled by an oversupply of credit and money encouraged by the Bank of Japan. After recovering from the Endaka recession up until 1986, exports were bolstered with an aggressive fiscal policy and thus a lower yen. This led to an asset price bubble and subsequently a market correction in 1992. When it burst in the early 1990s, it led to Japan's lost decade, a period of economic stagnation. And there you have it, our updated list of 10 biggest booms and busts in economic history. These examples showcase recurrent patterns of economic euphoria and despair that have shaped our world over the centuries. Do you agree with this list? Do you think I've missed any out? What interesting economic history would you like to hear about next? Let me know in the comments below. If you found this video informative and engaging, please give it a thumbs up, subscribe to our channel and hit the notification bell to stay updated with our content. Thanks for joining us at BizVinci, and we'll see you in the next video.